You wanted the best. You've got the best podcast. The hottest podcast in the world. The Chris Voss Show, the preeminent podcast with guests so smart you may experience serious brain bleed. The CEOs, authors, thought leaders, visionaries, and motivators. Get ready. Strap yourself in. Keep your hands, arms, and legs inside the vehicle at all times, because you're about to go on a monster education roller coaster with your brain. Now, here's your host, Chris Voss.
I'm Chris Voss here from thechrisvossshow.com. Ladies and gentlemen, there are ladies things that makes it official. Welcome to 16 years of the Chris Voss Show with over 2,200 episodes. Be sure to refer the show to your family, friends, and relatives. If you don't, Santa might not bring you what you want for Christmas. By the way, if you're watching this 10 years from now on the YouTube channel, which just turned 18 today. I logged in about 1 a.m. last night, finishing up some work, and YouTube's, did you know you're 18 years old today? I knew it was, 2006. I think the memory's fading. The Alzheimer's kicking in, clearly. The podcast is 16, and then the YouTube is 18 years old. Just amazing that we've lived that long, or that anyone cared to watch anything we do. But get more people to do it. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Chris Voss One, the TikTokity, and all those crazy places on the internet. Today, we have an amazing young man on the show. We're going to be talking about his business, and he's going to tell you about his entrepreneurial journey, and we're going to get into it. Today, we have Shemesh on the show. He is the co-founder and managing partner of Amerinote Exchange, LLC, and the CEO of Amerinote Capital Funding, LLC. They're a fixed private income and secondary mortgage market space dealing in high volume and high ticket price mortgage portfolio purchases across the U.S. I wonder if he'll take my mobile home part. No, I'm just kidding. I don't have a mobile part. He has always been an autodidactic? Am I saying that right?
Autodidactic.
Oh, that's right. Autodidactic.
Self-taught. Fancy term for self-taught.
You and I skipped college too, but I flunked second grade. That's the callback joke on the show. He began his journey in 1999 in the primary mortgage market. That's when I was in there too. It was fun until 2008. He transitioned to the secondary market in 2006 and has been crushing it there ever since. His interests revolve around self-improvement education, both material and spiritual as well. It's good to have that balance. And welcome to the show. How are you, Abby?
I'm very good. Chris, how about yourself?
I am excellent. It's just wonderful to be here and be alive and to be above ground today. Give us your .coms. Where can people find you on the internet, or the other dots, if you will?
Sure. So our website lives at AmerinoteExchange.com. That's AmerinoteExchange.com. The word exchange is only spelled with an X, and there you'll find all of our services, which really kind of serve retail and institutional markets.
Give us a 30,000 overview of what you do there.
Sure. So we are, simply put, we buy and trade mortgage loans, right? Wells Fargo or Bank of America or Mr. and Mrs. Smith down the street will originate a mortgage. And typically, most mortgage originators, most mortgage lenders, it's like a conveyor belt, right? They'll go ahead and they'll crank out these mortgages, maybe 1,000, 2,000, 3,000 a year, whatever it may be for the larger outfits, and the smaller ones, just a couple a year perhaps. And, typically they don't hold those mortgages to term, right? So they'll go ahead and create those loans, and then they'll offload those loans to an investment firm like ours. And I'm sure a lot of people watching this have received a letter from Capital One or Chase saying, hey, hello, this is a letter letting you know that we sold your account to XYZ company. Please make your payments there. That's typically what we do. And really, we provide, in a nutshell, liquidity to the secondary mortgage market to keep the Ferris wheel going round and round.
Wow. That way they can constantly issue new loans and all that sort of good stuff. So who are your clients?
That's a good question. For the first, from 2006 to probably 2012, so with 6-7 years, our clients were literally Mr. and Mrs. Smith down the street that seller financed a property because they took back a mortgage loan. So they seller financed the equity in their property when they sold their house. And, they got the down payment. They started collecting payments over maybe a 10, 15, 30-year loan period. And, inside of year 3, they realize that they don't want this money trickling in. They just want their money. They want to move to Florida. They want to move to Hawaii, whatever it is. They contact a company like us, and we would buy, I'm just using an example, their $100,000 loan for $95,000 today. So they don't have to wait 30 years to collect, the 100 plus the interest. They definitely lose some interest there, but what they gain is that financial freedom to move on with their financial goals and so forth. That's one customer base, and that's still about 65% of our customers, which is that retail private lender market. And then on the flip side of that, it's, banks. It could be, credit unions, banks, brand name banks, off brand name banks. We deal with pension funds, hedge funds, all of the Wall Street adjacent players. And these are mostly large tranches, large portfolios, large pools of mortgages that get traded either through us or purchased by us.
Oh, wow. It says here you take loans from $25,000 up to $5 million on an
Correct.
one given loan.
Yeah, that's one loan amount, right? So we could typically now go higher than 5 million, but just to give you an idea, in 2023, Amerinote Exchange transacted on about 257 million on one. It was one transaction broken up in 6 bite-sized portions. We call them tranches. So 6 tranches, one bank, 257 million. We had to take that down in sections because of the capital market. If some folks may recall, in 23, inflation was going nuts. The war in Ukraine, which, was the catalyst to that inflation, was raging, still is kind of, but it was really ramping up. And that created a bottleneck in the capital market. So banks were, the banks that couldn't use government funds like the Bank Term Funding Program came to companies like us to alleviate that pressure.
Do you deal with, I notice here you have a 96% closing ratio. Do you guys
Yes.
deal with just A paper then? A quality paper credit?
No, that's a little bit of a hack there. So 96% closing ratio doesn't necessarily mean that we're buying every single loan. Like 96% of the loans, let's just say 9 out of 10 loans that come across our desk, we can buy in some form or fashion. It may not mean that we can buy the entire loan at once. In the private space, there's something called a partial purchase. So you have a full purchase, which means we buy the whole loan, you assign the whole loan to us, you move on with your financial goals, we move on with the loan. There's also something referred to as a partial purchase, and this is on the retail side only. So banks don't necessarily deal in this section, but a partial purchase option would be if you have a 27 years left to collect on a mortgage. You collected the first 3, now you got 27 on a 30-year left. And we make an offer in 27 years. The seller's, nah, it's too low. I don't like it. I go, okay, Mr. Seller, or our team would say, okay, Mr. and Mrs. Seller, we can buy a bite-sized portion of that loan. So we can buy the next 7 years of payments for a much higher percentage. And then on 7 years and 1 month down the road, everything, and I mean everything, will then revert back to you, principal, interest. It all happens automatically, and it happens on our dime. And that's called a partial. And that's that. If memory serves, a little bit before my time, but that type of option has been around since the 70s, when it, which kind of originated in the Carter administration with the inflation then, and that's when the seller finance market really blew up after, World War II, which of course the only way to buy a house back then, pre-World War II, was seller financing.
Yeah, isn't that crazy?
Yeah.
Crazy. Yeah.
Yeah.
Times have really changed.
Times change.
Times change, and everybody has fun with it. So tell us about your entrepreneurial journey. How did you get down this road? Did you have influences from your parents when you grew up, or family?
Yeah, that's a good question. My father came here first generation. So I'm first generation on my father's side, and second generation on my mother's side. And my father came here as an electrician. He was an electrician when he immigrated from Germany by way of the Middle East. Oh. And when he got here, he immediately started working for an electrical contractor as an apprentice. And not so long after, he started his own business. And really, we really take for granted in this country, the best country in the world, in my opinion, the ease in which one can go down that entrepreneurial journey. And we were just in another country in Europe, as a matter of fact, a couple of weeks back. And, I said to my wife, it's just not America. I mean, no dig on Europe. I love it. The food's great. The coffee's great. But it's just not. Food's great, believe it or not, in some parts anyway. I was not in London.
Okay, you were in England. Okay,
I was not in England, but I will say that it was a, I learned a lot as far as, kind of pulling yourself up by your bootstraps from my father and watching my father's, work his own business. He wasn't the best at it, meaning in the sense that he was very good at being an electrician. He wasn't very great at like setting up SEP IRAs and, payroll and, all this stuff. And I learned a lot from his mistakes, I guess you can say, if you want to call them his experiences, we'll say.
Payroll? Are we supposed to pay people around here? Are we supposed to be paying you guys? Even give me goodwill checks. But so did you identify that early on where you're like, I don't think he understands, the money part maybe?
Yes, very early on. It was very, very apparent. My family grew up in a very middle class area section, Northeast Philadelphia. So the greater Northeast of Philadelphia, it was a very blue collar area. We had a lot of police and firefighters on our street. Blue collar, very blue collar. And, everyone around us had, for instance, a lot of my friends growing up, their parents got them new cars when they turned 16. We didn't have that. We had to go out and buy our own vehicles. So everyone had the brand new Nissan Maxima, which drove me crazy. And I had a 1977 Monte Carlo with a two-tone, not by design door on it. In a sense, it was a mismatched color, basically, is what I'm saying. It wasn't sexy. My brother and my sister both put themselves through college on their own dime. And, that's how we grew up, was by the bootstraps.
Yeah. It was definitely by the bootstraps. I drove a Monte Carlo. I mean, this wasn't out of high school. My parents were poor. But later I worked at a dealership and drove the Monte Carlo 454 SS.
Oof.
Oh, my God.
What year was it?
I don't know. When it first came out. And then they did a truck, the 450 SS. Whenever that 450 SS, 1987?
It's a great engine. Yeah. It's amazing.
If you wanted to pass somebody on the highway, you were on a 2-lane highway, you wanted to do that passing that you do in rural areas, you would just, get ready to go and you just punch that gas, move to the left, and you would be around them in like seconds.
That's right. Yeah, we lived in, and I can kind of get into this. We were nomads, my wife and I, in the mid 2000s, riding around the country in a motorhome, and we had a 454 underneath the hood. Easy to work on because I was very familiar with it because my neighbor had a Corvette. Was the Corvette had the 454? Yeah. And a great engine, simple to work on, more or less.
Yeah, compared to what's now, Jesus, wow.
Yeah, dude, you need a computer. Yes, sir.
So how'd you get in the mortgage business then?
It's funny, I was out of high school, like in autos. I was kind of bouncing around, but I've always dealt, my superpower has always been interfacing with people, right? So that really kind of morphed into sales. But I was, in the automotive, I was selling cars in Jenkintown, Pennsylvania in the mid 90s and early to mid 90s. And, I sold a car to a guy. He was telling me what he was doing with real estate. A couple of years, that piqued my interest. And then a couple of years later, especially after the Clinton and Gingrich paired up to repeal the Glass-Steagall Act, which put a firewall between commercial and investment banking. And that's what Roosevelt put into place. They removed that firewall, which then created the environment for the pump, the mortgage pump in the early 2000s, which they were just hiring. Here's a mirror, sir, breathe on it. If it fogs up, you can be a mortgage broker, basically. It
was that way.
Yeah, I got recruited by a company, and the rest was history. I started as a junior loan officer, and I was like, I'm not going to be doing this forever. And it was kind of true. We used to have, believe it or not, we used to have banks come to our shop and say, hey, what kind of loans do you have? This is our new loan product. You need this credit score, this, blah, 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 blah. And our new Bear Stearns accounts, so Bear Stearns not around anymore because they collapsed in the great financial crisis of 2008. But pre-2000, it was like 2004, Bear Stearns account rep came in and said, hey, this is so-and-so. She's going to be your new rep. I'm going over to acquisitions. And I said, what do you mean acquisitions? And then he kind of broke me down on what that was. And that right there is like, the light bulb went off. And the reason why is because I was already entrenched in mortgages, but it was so competitive, man. It was like so competitive. The acquisition side was like tumbleweeds, right? So it was so not competitive. And I was like, this is what I want to do. And there was a lower barrier to entry as far as an investor, and you're not competing with banks. You're not, competing with other multi-million-dollar companies. And that's what started me on that journey to the secondary mortgage market.
And I mean, it used to be the Wild West where anybody could be a mortgage broker. And then over the time, I became a mortgage broker in 1993.
Yeah.
We started their Park Place Mortgage.
Sure.
And it was kind of like anybody could be one. Like, I was really surprised how easy it was for us to get in the business. We had a big courier company, and we were doing all these mortgage deliveries, and I'm like, there seems to be money here. And so, I was really surprised they let us in. But how did you survive the 2008 crisis? Was that just more retail than? Tell us about that. I'm kind of curious.
That was so. I've said this on a previous podcast about a year ago. It's still the best analogy. So it was like the Forrest Gump scene in the shipping. You remember Forrest Gump, the movie? Mm-hmm. There was a shipping. The hurricane blew through the bayou and destroyed all of the shipping boats, and Forrest Gump was the only one. The little guy was the only one left standing. It's kind of similar to that, right? What happened was we started in 2006 with development of site, development of user experience, how to, raising capital, where, all of that stuff. And that kind of progressed upward through, we started getting lift in the late 2006, early 2007, and we were kind of trending really well. 2008 happened. Didn't really happen until the end of September, and we didn't really feel it until February of 2009. But 2009, I did not close any deal. We had leads. We had a lot of leads. We had a lot of offers. No one was saying yes to an offer from February of 2009 to September of 2010. Was like, it was a big dry spell. Somewhere, I could be mistaken, somewhere in about a year and a half of just very little business we were doing. I was also working, because we had a Marinote, and I was also doing affiliate marketing, which is internet website. I was supplementing because I knew a lot about marketing. That's how we had to market ourselves in the mortgage business to supplement, so I could kind of compete with the other group that I was working with. And then I took those tactics that I learned and I applied it to the note business. And then when I saw the writing on the wall, we started promoting financial products, credit. My wife and I did a 80-page credit repair booklet. We were selling that, leaning into our knowledge base, setting up blogs, setting up, using pay-per-click when it was really early on, and really worked out well. I was even doing like how to get six-pack abs, like someone else's product on clickbank.com. But that's how we kind of you remember?
Yeah, I was doing the same thing.
Yeah, but it was crazy, but it was pretty successful. I mean, we moderate success. And then, in the middle 2000, so I signed up a deal in July of 2010. It didn't close until early September of 2010. And from there on, it was just like gangbusters. Haven't really looked back, really didn't pay attention to our affiliate marketing enterprise at that point, because I was like, one of these things are going to pop. You know what I mean? Either we're going to be doing one or the other or both. And we just went with the win. We were doing two, like an A/B test almost.
Yeah.
And, because they're both very interesting to me. And, it turns out that the secondary mortgage market is great, the financial aspects and the investment aspects, but to get that off the ground, you need that marketing aspect, and the reason that we succeeded and thrived through that period of time was because we were using digital marketing. Now, if you remember back in the 2000s, Google really came on the scene in 99. They didn't start the paid advertising to 2004-ish. It didn't really, Facebook, 2004, they didn't do any paid advertising until after their IPO in 2012. So it was really in their infancy as far as digital marketing. And we really were leaning into it because I was just taking what I learned from affiliate marketing and applying it to the note business. No one was doing that. And that's what really supercharged our our success until our competitors right around 2013, 2014 started kind of catching up, and bigger money started pouring in and really competing with us, or in the industry. I shouldn't say us in general. We're not the biggest out there, but we're most certainly one of the more older ones for sure.
Congratulations on surviving
Thank
that
you.
shit show.
It was a shit show.
Crazy time.
Yeah.
You know, we got, I mean, like most mortgage brokers, we got wiped out because just everything disappeared. And I did consulting for banks for a while. I'll never forget. Excuse me. One of the banks I consulted for was in Santa Monica. And I believe it was the first Santa Monica bank of something like that. But it was like an old ass bank, 100+ years old in Santa Monica, and I believe it's folded, or it's been bought out. But I remember I was in their offices. We were hanging up in the management room area, and they came in. They go, "Oh, we just got another bag of Jingle Mill," and I was like, "What the fuck is Jingle Mill?" You know what Jingle Mill is? Yeah.
No, I have no idea.
You don't? So
No.
I go, yeah, we just got another bag of Jingle Mill, and this is in 2008, 2009, in full crisis mode, and they go, yeah, we just got another bag of Jingle Mill, and I'm like, what the fuck is Jingle Mill? And they go, you haven't heard? You haven't heard about Jingle Mill? And I'm like, no, and you know, and they go. We have so many people that are just saying fuck it and throwing their keys in the mail to us telling us it's your home now. Have fun with it.
Yep.
That when the post office brings the bags, it jingles because there's so many freaking keys.
That's crazy.
Yeah. And I lived
It's
up
called,
in...
I was going to say, they called it a strategic default. That was the technical term, strategic default.
It's kind of crazy. And then I lived in Vegas at the time, and I'd flown down to there. But in Vegas, I lived up in the far northwest in an area that they just rapidly just been splashing up homes.
Is that Henderson?
No, Henderson.
Oh, it's Henderson the other
the
side.
Complete opposite. If you
Gotcha.
you jumped all the way over the valley, you'd hit both places.
Gotcha.
Up in the northwest, the streets became a ghost town. And about 1 out of every 4 homes had someone in them.
Yeah.
So I would go walk the dogs, and people would come to my house and hang out, and they'd be like, how come in the middle of the day there's all these crickets chirping? And I'm like, that's not crickets chirping. Those are the fire alarm batteries that have gone out.
Oh, wow.
And you
crazy.
go out on the street, and you just hear beep, 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 beep.
That's crazy. Dude, Vegas got hit hard. I'll never forget. Stockton, California, San Bernardino, California, Las Vegas, and Miami, Florida were ground zero in the sections of the countries, in their respective sections of the country. And the one state, the one primary state, I mean, Nebraska was fine, Idaho and, all the Dakotas, they were all fine. But Texas didn't feel a thing from it. It was so I'll never forget that.
Yeah, it was so insane. And what was the other thing that was funny about that time? And then we started having the break-ins for the squatters started moving into the homes. And it was crazy.
Wow.
And there was just so many homes they could move into. In fact, when I moved to California, squatters broke into my home. They saw the garbage cans out front with crap in them that, it's clear I'd moved. And but yeah, it was an insane time, but it was kind of nice actually, walking around and stuff. But you just walk around. I'd walk around my dogs around the streets, and it would just be like a ghost town.
That's creepy. Very creepy.
It's almost like a zombie sort of apocalypse.
That's right.
Experience.
That's right.
Yeah. I was lucky. I sold my home in Utah, moved down with 3 investors, 3 including me, to invest in mortgages and buy houses in Vegas because it was just going crazy. And they would have a line out the front door of the model home of the subdivision, and people were sleeping overnight. And every 3 or 5, I can't remember if it's 3 or 5 now, but it was every 3 to 5 people who bought, they would keep increasing the prices every 10,000 up.
Wow.
I mean, you had people buying homes that were $1,000 a month over what the market would pay to rent them.
Wow.
And they were just doing on those, the no down.
Yep. Nina, no interest, no assets. Yeah. It's crazy.
And it was crazy. I mean, we would do my mortgage company wouldn't do the loans. I was like, we're going to end up buying this. Fucking. And so I moved to Vegas with my investors when and this is like the peak of the market. And I started interviewing realtors and going to realtor brokers and going to lunch with them. And one of them said to me, she goes, "This is going to pop. This is a bubble." I was like, "What?" And she showed me the history of how 9/11 had caused everyone expected a recession. They pulled back their building permits and all the plans they had. They put them on hold for several years. And it created this inventory hole that was moving through the system. And she goes, see how inventory is catching up to demand and it's going to overhit? They go, that's when the bubble's going to pop. And it's now. Wow. And it was crazy because I was like, shit. But fortunately, I'd sold my house. So I was like renting when we came down. We rented some mansion. And then, and then thankfully, us as investors, we didn't go into it. And I came home to my people and went, it's going to fucking blow.
Wow.
It's going to blow.
What, do you remember when this was?
I don't know when exactly it was, but I think it was within the next 6 months that the collapse started or
right.
Year.
So it had to be 2008, right?
Yeah, when things melted down.
September 15th, 2008.
Yeah. It was crazy. But I think it was a couple years before that she showed it to me, and it was the peak. I don't know. It might have been 2007.
Yeah, no, there was smoke in the air.
Yeah, there was, and there was people writing blogs. Some of the real estate agents were going, "Is there going to be a broke pop here?" So people listening to this, who are your clients and how can they reach out? I see you can get a quote, what you buy, get in touch, things like that.
Sure. So our clients, just to kind of describe again, are folks that are, sold their house or inherited a mortgage that they're now collecting payments on that they don't want anything to do with for whatever reason whatsoever. I mean, it could be an inheritance, it could be, lifestyle change, it could be investment opportunity. What they'd want to do is they can simply go to Amerinote Exchange. Again, the word exchange only spelled with an X.com. Any top right-hand side of any page, you're going to see get a quote. You click on that. It's a very simple questionnaire, maybe 10, 12 questions, 4 of them are personal, like name, email, first, last name. Hit submit, and then our staff, our trade desk, will get on that immediately. And it's typically about 2 business days to get a quote, and typically about 3.5 weeks to get the money thereafter. But it's very, very similar to the same type of process that occurs if one were to walk into a bank and borrow money for a piece of real estate. The only difference is that you're not under the microscope. It's the actual property value. Is the title clear? What the documentation, and really that's it.
Oh, wow.
Yeah. Pretty simple.
Probably all the stuff filled out. Remember that thing where they hadn't even filled out, or are they fake signatures and shit on?
Yeah. Oh yeah.
Just remember those deals.
Yeah. And that's that. There's still. It's so funny you mentioned that. Just real quick, we just received a $90 million portfolio that the guy wanted to sell for, 18 million. It's a portfolio of second liens, all originated between 2004 and 2007, and 60% of it was that. And we're, there's actually companies out there that will buy that for pennies on the dollar. We're not one of them because we're not in the business of it's more like a collection at that point. Yeah. The notes are lost. Some of the people are dead. We buy the actual secured instrument. We don't buy something that gets referred to a debt collector, and then you have to call the person and compel them to make the payment.
That's kind of an interesting business. We had one guy who does that. He doesn't do that as a job, but they do buy notes. But they found that since they're the financiers on the notes, they can deal with some of that. And so they've kept defaults from happening, which is kind of cool.
That's right.
It's an interesting story, and I was like, wow. And they're like, yeah, we'll work with them. There's no reason to force them into, if we can figure out a way to work with them. And it used to be back in the day that mortgage companies had this rule that they wouldn't allow you to pay less than the mortgage payment because
that's right.
if you do that, it establishes the new it writes a new contract over time. At least that's the lawyerese of it. And so if you do that, then that can become a permanent thing. If you accept $700 for once or twice, then you've established a new contract that an attorney can argue, I guess. But yeah, so they figured out a way around it where they just go, no, if we want the guy to stay in his home, and you want someone who feels like they have an ownership in the home over a renter, and they'll work with them on it. And I was like, wow, that's pretty. It makes sense. Why?
Sure does.
Why throw the baby out with the bathwater if you can?
And we do the same thing. We absolutely. In the sense that we'll work with them, and we're not in the business of taking properties. We want that monthly payment, right? So if we'll buy what is called a modified loan or a sub-performing loan, where you have 2 payments on time, and then it goes late for 4 months, and then another payment, and then it's late for 2 months. That's referred to as sub-performing, or someone who's in a significant hardship that just completely the wheels fell off the bus. We buy that loan as a non-performer. If we buy it correctly, we will then, the first thing we do typically is reach out to the borrower, try to keep them in the home, because that's, the last thing we want is, you have 230 properties in foreclosure spread across the entire country. Now you got to manage properties, water, especially in cold areas, the pipes burst, squatters,
Yeah.
We like squatters. We want squatters. We want the paper, not the bricks.
Yeah. So that makes sense. I heard that and I was like, yeah, that kind of makes sense. I always kind of wondered why they want to throw it away. But I know banks, they try and keep that pure A paper, and
they have to, because they got auditors coming in, and every month they're getting, or every quarter they're getting audited, and the financial, especially after 2008, the financial health of the bank is what keeps us in business, right? I shouldn't say keeps us, but it's a big ingredient into, like, right now, Q4 of every year, every bank is trying to get healthy for the new fiscal year. So right now we have the majority of our activity with banks occurs between January and March, and September and December. There's other activity in there, but that's the bulk of the bank activity, because that's, you want to talk about procrastinators. These folks wait to the last hour all the time. So it's the craziest thing. It's like pot, kettle black. You know what I mean?
Yeah. You write it out, and then, once the end of your fiscal year comes, assuming it's the calendar year, you're like, get rid of this shit. Get it out.
That's
now,
right.
Fire sale.
Right. Fast. We're
going to have to show it in the books if it's here on December 31st.
That's right. So, and, CEOs lose jobs because of that.
Yeah, that's very true. That's very true. So give us your final pitch out. Tell people how they can onboard, reach out to you, et cetera, et cetera.
Sure. So you could absolutely reach out to me on LinkedIn. I got a big presence on LinkedIn. I'm also on X, formerly Twitter, at Abby Shemesh, and then also at AmeriNoteX on Twitter, both Twitter and LinkedIn. And then, of course, you can always reach out. I'm very, very approachable and available through our website, AmeriNoteExchange.com.
Thank you very much for coming on the show. We really appreciate it, Abby. It's been fun, and what a wonderful story of survival and being an entrepreneur. Getting through those tough times. They were ugly times. We lost our little empire of companies. Just everything just wouldn't move.
Yeah.
And then I got into Twitter. But before that, I was starting everything I could to try and survive that thing. And at one point, we were starting all sorts of little companies. I was doing I think there was a thing where you would talk to people who are in default on their mortgages about trying to
modification. Loan modification. Yep, I remember.
And it was, and so my friend said to me, he goes, Chris, you've tried so many different ways to survive and just start new companies and try and just stay alive during this recession. And he goes, if it came out on the news that you had been an international arms dealer to try and survive, I would not be surprised, because you were working so hard to survive. I was starting companies and trying to find something that would hit and get traction. And thankfully I found Twitter, and we got good at it and tinkered with it. And then people started calling us going, you're really good at this. So I think I was top 1,000 person on Twitter at the time.
Is that right?
Barely joining. Yeah. And, and so people are like, hey, we'll pay you to consult on this shit. And I'm like, are you kidding me? Yeah, let's do that. And then social media burgeoned and all that shit. And we launched the podcast I adopted the Twitter in 2008, and then 2009 we launched the podcast and the Chris Voss Show and the brand and all that stuff.
Yeah,
all right,
that's amazing.
Well, continued success, Abby. We really appreciate it.
Chris, it's been a pleasure. Thank you.
Thank you. And thanks for tuning in. Go to goodreads.com/Chris Voss, LinkedIn.com/Chris Voss, Chris Voss 1, the TikTokity, and all those crazy places on the internet. Be good to each other. Stay safe, or else. Don't make me come back there, kids. We'll see you next time.